Hi, today is day 2. I promised to go live for 30 days. So I want to teach as many US business owners, US entrepreneurs, US franchise owners, and also 1099 income earners how they can save taxes legally with the Spendthrift Trust. I want to teach as many people as possible because this is the secret of the rich. With the Spendthrift Trust, you're going to save in three very important ways. Number one, you're going to save taxes year after year, generation after generation. Number two, you're going to keep your information 100% private. No one will know what you own, where you own it, or how much you own. And number three, I can't stop you from being sued, but all lawsuits become frivolous and go away. Spend the next 20 minutes with me to learn the secret of the rich. And if you are interested in setting up a free 30-minute tax breakthrough session, I will put this in the notes for you. So let's get this started. It comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, decided, hey, instead of killing my wives, let me divorce them, and he started the Church of England. What a swell guy. He went to go tax the lords and ladies of England, and they went back to the 12th century, the Magna Carta that was put in place for King John I, and said, oh, no, King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that's going to turn 365 years old in 2026, before we were a country. Our current tax structure that we're under went into effect February of 1913. And since then, it's grown and grown and grown and grown and grown and grown. But back in 1913, the super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. Guess what? If they can save taxes, we can save taxes. Hi, my name is Sally Gimmon, and I'm the owner of www.thetrustisyou.com. I am a affiliate of a law firm that was started 78 years ago by a Harvard law professor. In 78 years, not a single trust has ever been audited. Now his grandson and great-grandson run the law firm, and when you start the trust, you become a private client, and they will send you a certification saying if you get questioned by the IRS, they will defend you free of charge. In 78 years, it's happened one time only. A senior IRS agent went down to Texas to the law firm and examined actually a Beneficial Spendthrift Trust. He spent 5 hours in a boardroom. He approved it. He went back to home. He sent an unsolicited letter to the law firm explaining how he approved it. Then he retired from the IRS and became an affiliate like I am, and he called all the clients he worked with. I wish I had a bunch of lists of names like that. So today's example is a California witness. Is a witness on who goes on to court trials. He actually works for the ladder company, telling them why this person should not get money. So just to give you an idea, I'm going over to look at this. He files jointly. Just let you know, there's four ways to file your taxes. Most expensive way, single. Second way, head of household. You're divorced and have children 18 or younger in the household. Third way, married filing separately. And the cheapest way is married filing jointly. Listen up, everyone. Quietly, on January 1st, the IRS changed married filing separately to match single for the first from 10% all the way up to 35%. 37% is a better rate. If you are married, do yourself a favor and file married jointly because you'll save a double the amount in taxes. Again, the IRS is trying to get money because we're broke and we're in a war right now. So, just to let you know about this, it's an IRS Tax Code 643B. If your CPA or financial advisor says, ooh, the IRS wrote a memo about this back on August 9th of 2013, yes, they did, a memo. They said they do not like Tax Code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. Well, it's their opinion. In my personal opinion, lima beans are the worst vegetable in the entire world. You can't swallow them whole because they get stuck, and you have to chew them. Yuck. So this California witness, he's filing jointly. He made $160,000 in 2024. So these are 2025 numbers that I'm reading to you right now. 90% on federal income taxes, he got to save $22,687. On top of that, California state income taxes is an additional $7,893. So for the whole year of 2025, he got to save $29,918. Now I have to apologize. I should have run the numbers for 2026 because California state income taxes have gone up. Yes, there's a big, beautiful bill that supposedly lowered our taxes by a whopping less than 1%, 2%. But California state income taxes have gone up. He had planned to start doing even more, being a witness for the so he could make more money with this. The money he's saving, again, let me explain this to you. The money he's saving, $29,918, that is his money. He can put this back into his business. He could pay off his mortgage. He could buy a new vehicle. He could take his family on a well-deserved vacation. He can give to his favorite charity, or he can save for retirement. Now, listen up. He is 62 years old. His wife is 61. They're not on Medicare yet, but when they do get to Medicare, since he's making, if he's going to be making more than $212,000 because he files jointly, or if you're single and make more than $106,000, you could be charged an IRMAA surcharge. Every October, the IRS goes back 2 years so October 2026, they're going to look at all 1040 tax returns 2024. They're going to add together everything. How much you're getting from Social Security, how much you're getting from pensions, how much you're making in wages, how much you are taking from a 401k withdrawal, how much you're taking from a SEP withdrawal, how much you're paying in capital gains, interest income, dividend income, rental income, and royalty income taxes. Again, these are 2025 numbers. They haven't come out with 2026 yet. But if you're single, $106,000 or more, you're paying an extra surcharge to Medicare, not to the IRS, to the Medicare. Or if you're married, $212,000 extra surcharge on parts B and D of Medicare. Because the trust files a 1041 tax return, they will never be checked, and you get to avoid that surcharge. Again, with this trust, it's on the federal level, not on the state level. So we highly, highly suggest you close down all LLCs, S Corps, and C Corps. That's state law or statutory law. What they do in California is not the same thing that they do here in North Carolina. Anyone can go online to the Secretary of State of North Carolina or California or the Corporation Commission of your state 24/7 and research LLCs, S Corps, and C Corps by your personal name or by the LLC, S Corp, or C Corp name. 40%, yes, I Googled this, you can Google this too, 40% of LLCs, S Corps, and C Corps get sued every year. That's like gambling in Las Vegas. The house is running the tables. So again, with the Spendthrift Trust, you're going to put all your assets into the Spendthrift Trust. If someone tries to sue you, all lawsuits become frivolous. Here's a true story. There's also the Beneficial Trust that will stop all U.S. investors will stop paying taxes on profits. No capital gains, no interest income taxes, no dividend income taxes, no rental income taxes, and no royalty income taxes. One of my clients has 100 doors in Chicago. He's in my national real estate group. I sat next to him back in 2023. Not making fun of Patrick, but he has a pinky ring with about 5-carat stone in there. He wears a gold Rolex watch. The man has money. He likes to spend it. Good for him. I've never seen his RV, but let's just assume it's going to be a $250,000 RV with all these parts that you can take out. In 2024, he couldn't slow down for traffic. He hit the car in front of him that pushed that car in front of her. So one car got squished. His insurance card, his beneficial trust owned the RV. His insurance card showed the trust name. His Illinois driver's license showed Patrick's name and his home address. Now, I can't help him. His insurance is probably going to go up. He caused an accident. Too bad, but he's making lots of money. Good for him. 4 weeks after the accident, he got a $900,000 pain and suffering lawsuit from the woman who was squished in the middle. Now, his insurance had a bodily injury and also had collision to fix the other person's car. She was trying to make more money off of him. Probably she saw his pinky ring and his Rolex because he always wears it. And so Patrick calls me in a panic. I'm like, Patrick, slow down. You have the lawsuit. You know who the plaintiff is and you know who the attorney is. He goes, yes, I have their address. And I'm like, you're going to copy the first page of your trust, write a letter saying you can't get blood from a stone. All my assets are in the Spendthrift Trust. He calls me 8 weeks later and he goes, Sally, I haven't heard anything about the $900,000 lawsuit. I'm like, it's gone away. He's like, wow, you just saved me $900,000. I'm like, Patrick, I'm saving you a lot more money than that. Congratulations. So again, today's example is a California expert witness who in 2024 made $160,000, saving 90% on federal income taxes, got to save $22,687. And on top of that, California state income taxes of $7,393. For the full year, he got to save $29,918. He's going to save this even more money in 2026 because I know California state income taxes have gone up in 2027, 2028, and so on. If his great-great-grandson in 2095 decides, hey, great-great-granddad was crazy, I'm going to cancel the trust. Why he would do it, I don't know, but I'm just giving you an example. If the great-great-grandson cancels the trust in 2095, the great-great-grandson will be responsible for any taxes that were saved in 2095. Anything saved in 2025, 2026, 2027, 2030, 2045, 2080, everything else he'll never have to pay back. So if you want to find out more, I have a free masterclass at www.thetrustisyou.com. Go out there, watch my free video, and set up a free 30-minute tax breakthrough session with me at www.thetrustisyou.com/scheduling. I'm going to take you out to NerdWallet. It's a free website. I'm going to figure out how you file your taxes. Single, the most expensive way. Head of household. You're divorced and have children 18 or younger in the household. Married filing separately or married filing jointly, cheapest way. And then we're going to find out how much you make and then do the formula. This is legal. It's in the IRS Tax Code 643B. If you want to learn how you too can start saving 5 figures in taxes every single year, please set up a free 30-minute tax breakthrough session with me. This is day 2 of me doing lives on YouTube. Hopefully it's going to go even better on day further on. Thank you for watching. Have a beautiful Sunday. Take care.